However, one thing to note is that SMH, which is the leading semiconductor ETF, is stalling out as Nvidia touched its all-time high, Taiwan Semi touched its all-time high, Broadcom just slightly below its all-time high. SMH did not follow. We are an all-tech portfolio, which means how we approach risk is very unique, and it's important that IO Fund members understand this. We track risk much more closely, and we have tools in order to make sure that we're managing risk accordingly. This is very different than a portfolio that might just own Nvidia as its only tech exposure, throw in other sectors to diversify. We don't have diversification in order to protect ourselves in terms of risk. Therefore, we watch this stuff more closely than almost anyone. I can typically go into a conversation with very intelligent portfolio managers, very intelligent media hosts, and they are not tracking anywhere close to what we're tracking in terms of tech. And what we are doing is getting in front of any potential sell-offs, and we did that actually quite successfully. We were seeing AMD and Dell looking toppy. And this was, prior to SMH's large drawdown. If you look at the health of the semiconductor market, it is quite clear that Nvidia no longer has its peers supporting its all-time highs. This is new. For the most part, during Nvidia's AI boom, which, might be about 18 months now, semiconductors were supporting it. SMH was supporting it. Right now, there's what we call a divergence, which means SMH is pointed down even as our leader goes to all-time highs. As a tech investor, it is much safer and lower risk to wait for SMH ETF to support our buys. Otherwise, at this point, the semiconductor at a broader view, at a wider angle, could potentially weigh on Nvidia's breakout, so to speak. And it's just a lot stronger and a lot lower risk to wait for SMH's participation. So it doesn't, our members are always free, and we encourage you to buy and sell stocks according to the way that you think is best for your own goals. We are not financial advisors, but we are pretty darn good at tech. And when we go to buy, we really like participation from the peers. We would want to see more semiconductors participating than what we're seeing today. Because it really comes down to, can Nvidia truly hold up not only the Mag 7, but can it hold up all, semiconductor sector? That's asking a lot of a stock. And what I would like to see is a couple of things before we resume buying Nvidia: SMH participation and a better valuation for Nvidia. And I'm going to go into the valuation side. So to make it really clear, the threat of disruption for Nvidia, and with Blackwell coming, has never been lower. Nvidia's runway looks extremely strong. However, that's the what. And actually, if you look at the Magnificent Seven, they're actually not so magnificent. We have a Magnificent One, which is Nvidia. If you go back to about 2021, give it, a nice 3 to 4 year time frame here, Nvidia is up 1,000%, and there is not a distant second. Apple is up about 60%. We're missing 2 zeros there. 60% to 1,000%, 4 digits versus 2. And the next magnificent stock is Broadcom. Broadcom is, roughly 500, 600, 700% returns. So the Magnificent Seven is not so magnificent. And it's really important that we all know that, because the tech leaders are being decided today. And the tech leaders, it's quite clear to me, are semiconductors. That's the what. That's the what we want to buy. The when we want to buy, again, as an all tech portfolio, is something we are answering as we go along. And I have some more information about the when and what we would want to see before we resume buying.